TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. I know I'm like a lot of listeners. We thank you so much for helping us to earn money in the market, and Mr. O'Brien also, and what you all do at TFNN. It is absolutely huge. Appreciate it very much. All the best to you and your family, man. I'm telling you, we so appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Hey, happy Thursday. Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Now 5 days a week from 3 to 4 Eastern. 877-927-6648. That is the number to use if you want to talk to me about this market. Always appreciate the calls when they come in. Don't forget you can catch my show as a podcast on iTunes if you can't listen live. I know a lot of people do that. Head over to iTunes and download the podcast. And don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi right in your smartphone browser, and you can get the stream that way as well. Tiger TV on the homepage of tfnn.com is a good way to listen to the show as well. You can also look at charts live right along with me, so that's a pretty good deal. Channel 1, the show is carried live, and it is archived on Channel 13. Tiger TV is also viewable on your handheld device as well. All right, checking in on the markets here. See the NASDAQ composite just trying like heck to hold on to its 200-day simple moving average here. Tech index right now trading at 2983. Up just over 1 point on the day, 29.83, and its 200-day moving average is 29.74. So it's about 9 points above that 200-day line. S&P 500 is in a little better shape than the NASDAQ composite. It's still holding well above its 200 moving average. It's also up a little more than 1 point today to 14.05. Its 200-day moving average is all the way down at 13.76. So about 34 more points to the downside. That 13.76 level, the 200-day line for the S&P 500, is about 6 or 7% off its recent high. So same for the NASDAQ. Right now about 7% off its high as well. So fairly mild correction or pullback in the NASDAQ up to this point, but of course it's really all going to be predicated on what Apple has to say after the close. Another high-profile earnings report in tech comes with Amazon as well today after the close. Taking a look at volume in the major averages. Today, relatively light. We are tracking about 4% lower on the NASDAQ today. Yesterday on the NASDAQ, volume somewhat heavy at 1.88 billion shares. Headed into today, the tech index had showed 4 higher volume declines in the past 5 trading sessions. So that is unequivocal distribution. We've been talking about distribution in the market basically since late September. Very risky environment out there right now where buying growth stocks, which I like to do during market uptrends, very, very risky right now, and which is why I'm sitting in a lot of cash right now in the Ultimate Growth Stocks model portfolio. Volume on the New York Stock Exchange tracking a little bit higher than what we saw yesterday, about 10% higher or so than Wednesday. NYSE volume on Wednesday was pretty much average at 646 million. Economic data today, we had weekly jobless claims, larger than expected drop to 369,000. The estimate was for a drop to 375,000. The prior week's claims were revised higher just a little bit to 392,000 from 388,000. We also had the durable goods orders report for September, up 9.9%, a little better than expectations. Excluding transportation, up 2%. That was also slightly better than expectations. Pending home sales for September, up 0.3% from August, but up 14.5% from a year ago. did have a couple of home builder reports to talk about here. Ryland Group doing pretty well, trading off its highs right in the middle of its trading range today, still up $1.31, 4% gain for Ryland Group to 34.10. A lot of these home builders started to move in July. Ryland broke out of a base, you can see here, late August, early September, broke out over that 27 level. Recently trying to clear a new swing point here around 34. So good volume in Ryland Group today. The numbers were really good, and they really have been good throughout the industry group. A lot of home builders reporting strong earnings. Profit at Ryland Group, 45 cents a share, well above the consensus estimate of 17 cents versus a loss of 6 cents in the year-ago quarter. Sales were up 44% to $359 million. Contracts for new homes at Ryland rose nearly 56% to 1,500 units. And again, last breakout for Ryland in September over 27. But if you look at a weekly chart here, I always like to look at weekly charts. Ryland Group is recently found support at its 10-week moving average. So even though it's made a big run, I think an argument can be made here. I can understand why people might be tempted to start a small position here. Again, when the market's in a downtrend, I'm just really not in the mood to buy much of anything. A market, a negative market tide tends to bring most stocks down with it. All right, going to take our first call from the for the day, 877-927-6648. Let's talk to Fish in Riverview, Florida. How you doing today, Fish?
Pretty good, Ken. How about you?
Hanging in there, my friend, hanging in there.
Hey, kind of a general question. I'm considering, it seems like the way things are going right now, it's highly unlikely that the market's going to, gap up or something like that. But I'm thinking about possibly shorting one of the inverse ETF funds, and I wanted to get your thoughts on that. Should I just wait a while, or would you possibly do something like that? And then the other thing I'm thinking is, do you buy the weakest one, like the TZA, or do you buy the one that hasn't dropped so much yet? I'm thinking about something like TZA, SDS, something like that. I want to get your thoughts.
So, all right, let me just pull up the TZA here in Tiger TV. The TZA, this is a direction fund, I believe. Yeah, direction fund. You get 3 times the inverse of the Russell 2000. So when the fund is going up, this or when the Russell 2000 is going up, this fund is going down. I mean, the direction small cap bear 3 times fund, which we're looking at right now, it has come up off its lows, and it's still holding above its 50-day moving average. So its technical picture has improved, I would say, over the past week or so. The fact that it's moved above its 50-day moving average and is holding tells me that it is showing some technical strength here. My overall read on the market here, it's very tough. I mean, it's really is easy. If Apple's going to report a blowout quarter tomorrow, you're probably going to get a big rush of tech buying. Now, Apple, its technical picture really looks to me like it's in trouble here. So while it doesn't, the chances don't look good that it's going to pop on earnings. Really in this type of market, anything is possible. So, I've said it a lot. It's just it seems like it's a no-brainer to go short here. Because of all the distribution that we've seen, particularly in the NASDAQ. But then again, if you get these numbers after the close from not only Apple but from Amazon, you could see a pop in the market. Even so, you'd still be early in the stages of a rally attempt with no confirmation. So even if we do head higher tomorrow because of stronger than expected earnings from Apple, I still think the market is a little bit unsettled here. Do I want to go short? If I do, I know that I may very well have to cut my losses short. Mm-hmm. So it's it's not an easy call. I would say with the TZA, the fact that it's been able to hold above its 50-day moving average for 4 days now, and you can see where it's trading. It's only down 6 cents after hitting an intraday low of 15.45. So there's still some buyers in that fund today. In a confusing market, I tend to just kind of pull back and step aside.
Okay, just be patient, huh?
Just be patient and be disciplined.
All right. Well, thanks a lot, Ken. Really appreciate it.
All right, Fish.
You the man.
Thank you. Bye. Yeah, I mean, it's not an easy call. It's not an easy call. I can't say to step in and buy the TZA here with conviction. It's just it's such a fickle market. I know that again, you can go short the indices with a short ETF, whichever one you want to use. Just the QID or the TZA. But what if we get a blowout number from Apple? You got to make that call. I just think without an edge, and I just don't feel like I have an edge in this market right now to go short with conviction or to go long with conviction. And when that's the case, it's generally best just to be patient and wait for renewed signs of buying. It'll come at some point. But even if we close higher today, for example, on the NASDAQ composite, we'll switch back over, take a look at that. It's only going to be the first day of a rally attempt for the tech index, which means that you're going to want to see additional follow-through sometime next week. It could happen. If it does, then it's a time maybe to start nibbling at some long opportunities. But you can see the NASDAQ today, after hitting an intraday high of 3,007, it's back near its session low. Again, still trying to hold on to its 200-day moving average here. And we haven't taken a look at Apple yet. Why don't we do that? They, again, are coming out with earnings after the close today. And this is just a stock that's looking quite vulnerable here. Down another $7 today, trading just off its session low, right around 609.82. Its 200-day moving average here at 585. So earnings expected to come in at $8.81 a share, up 25% from a year ago. Sales up 28% to $36 billion. A lot of recent new product announcements from Apple, but not really affecting the stock that much. So people, of course, will be looking at iPhone sales, iPad sales. There's increasing chatter that iPad sales may come in below expectations. We'll just have to wait and see. My take is that even if Apple does pop tomorrow on earnings and it does, bring some buyers into the market, it's way too early to think that a new uptrend is right around the corner here. Again, if the NASDAQ closes higher today, and if Apple results in more buying tomorrow in the NASDAQ and the major averages overall, then you're just looking at the second day of a rally attempt for the market. So just nothing to get overly excited about. So that is Amazon. And then another stock looking quite vulnerable here ahead of earnings is Amazon. Look at the price destruction in the online retailer. Recently, it is only down 3 cents today to $228.46. But earlier this month, this was a $260 stock. So a lot of sellers, a lot of institutional selling in Amazon, just like there's been a lot of institutional selling in Apple. Weak charts for both. We'll see what both companies have to say after the close. Amazon is supposed to lose 8 cents a share, but sales growth continues, up 28% to $13.9 billion. All right, folks, coming back in about 4 minutes, just after 3:30 Eastern, my friend Keir McDonough from Brigos Capital will be joining me. So stick with me. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Keir McDonough, principal at Brigos Capital Management, will be joining me, at about 3:35 Eastern Time, so stay tuned for that. Checking in, let's see, we went over crude oil. 86.05 was the settle for crude oil today, up 32 cents. Gold for December delivery ends at $17.13 an ounce, up $11.40. U.S. dollar strengthening a little bit today, up 15 ticks to 80.07, and the yield on the 10-year note. In fact, let's take a look at the yield on the 10-year note here. It's actually showing some pretty interesting technical action today. Little breakout here. You can see the yield on the 10-year note right now at 1.83%, clearing some resistance today. So looking at the chart of the 10-year yield here tells me that we potentially could see higher yields going forward. We'll see how that plays out. Also with the 30-year note, same situation. Yield on the 30-year bond right around 2.98%, also in a decent technical setup here that could presage higher yields. Higher yields, lower bond prices. Maybe that means money comes into the stock market here sooner than one might expect. We will see about that. Talked about strong earnings from Ryland Group in the home building sector. Pulte Group PHM, not so lucky. Looks like a outside day here for the stock, down 56 cents, or 3.2%, I should say, to 16.89. Still holding above its 50-day moving average at 15.41. Pulte Group earnings were up 145% from a year ago to 27 cents a share. That was 7 cents above the consensus estimate. Sales up 14% to 1.3 billion, a little bit below the 1.4 billion estimate. Last base breakout for Pulte Group was when it broke out over $11 in early July. So here was the breakout, and you can see a big run up. This is a tough one to chase up here. I find that generally to be the case. I find it mostly to be the case in the home building group, that a lot of these stocks, they've just been running higher for so long, it's tough to chase them up here. Some other earnings reports, actually a bunch of earnings reports to talk about today. We're not going to be able to get to them all, but Akamai, big gap up for the stock. Kind of disappointing price action today, but again, in a market that's under distribution, not surprising to see it near its lows after early strength. The stock is still up $2.44, 6.8% to $38.55. But again, trading near its intraday low here after early strength. Let's take a look at a weekly chart for Akamai, and you can see here a stock that's still flirting with a technical breakout over 40.32. Not out of the question that it could happen, but would be nice to see Akamai trading near highs today, but there do seem to be some sellers in the stock because, again, it has given back a lot of its earlier gains. But the numbers were quite solid at Akamai. Earnings were up 26% from a year ago to 43 cents a share, 2 cents above the consensus estimate. Sales were up 23% to $345 million. That was also above estimates, and the sales growth marked the fourth straight quarter of accelerating sales growth. So you've got this sequential accelerating sales growth going on at Akamai, which is impressive during a time right now in third quarter earnings season where a lot of companies are coming up short on the revenue number. TYL is a company that serves a niche market. It is they basically provide information management solutions, services for local governments. That's their niche market. TYL, big move for the stock today, up 10% to 47.79. Big gap up, holding on to its gains here. Fairly significant short position in Tyler Technologies. The ticker here is TYL. As of October 15th, 1.2 million shares were held short. For a stock that trades about 150,000 shares a day, that's a pretty big short position. But bullish day for Tyler Technologies, and we take a look at a weekly chart for the tech name here. Probably a lot of people haven't heard of Tyler Technologies, but the yellow flag here, the caveat is that if you look back, it does appear to be a potential late-stage base that's taking shape. Good solid breakout so far this week, but this is a stock that has been, on a big price move over the past couple of years. So nice numbers today from Tyler Technologies, and good job. Kudos to that company for a solid report. All right, folks, Karen McDonough coming up next. Stick with me. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Let's check in on the markets here before we go to my friend Keir McDonough. Right now, the Dow down just 2 points or so to 13,075. The NASDAQ down a fraction to 2981. And the S&P 500 up 2 points to 1,410. Check that. NASDAQ up a point to 2983, and the Dow now up 4 points to 13,081. All right, I used to teach workshops, Investors Business Daily workshops with Keir McDonough. He is with Breakout Capital Management in Boston. He runs a growth stock, long, short equity fund. You can get more information at brigoscapital.com, and you can also follow Keir on Twitter at KIERMCD, Keir McD. Keir McDonough, good to talk to you again. How you doing today?
Doing great, Ken. Nice to be back with you.
All right. So I'm watching CNBC a few days ago. This guy comes on and he's asked to give corporate earnings season a grade, and he gives it a C+. And I said, I wish I had this guy as a teacher. What would you give earnings season right now for a grade?
Yeah, I could have used him also back in school. I think the guidance, a lot of the guidance came in okay for the quarter. I think the most concerning part was the forward guidance for many companies was way off. And I think that's why we've been seeing so much pressure in the market here of late.
Yeah, it's been rough. I mean, we had IBM, I think it was last week, followed up a day or two later by Google, and I think the market was completely caught off guard by the results from those two companies. But then yesterday and today, not too bad. We had a pretty nice report from Panera Bread yesterday. Akamai Technologies, not too bad, and also a name that both of you and I are following, ARM Holdings. I know you wanted to talk about ARM Holdings. What do you like about that company?
This is a very interesting company. It's a British company, and they design. Basically, it's an intellectual property company. So they design the microprocessors that are used in mobile phones like the iPhones, tablets, digital TVs. It's a real high-margin business. In fact, their pre-tax margins this quarter were 46%. They're up about 300 basis points. That's a big number. Their after-tax margins are about the same, about 48.8%. These are really big numbers. They are the dominant player in their space. That's one of the reasons I like them. And to put it in perspective, they just get an upfront fee. And then they get royalties every time one of their customers uses an ARM-designed chip. So I really like the business. I like the growth rate. I like the space they're in. And I think the demand for mobile phones and tablets is only going up.
I would tend to agree, and when I look at a weekly chart of ARM, I mean, there's this big, huge base, and even though the stock has made a big move this week, arguably, I mean, if we were still in a market uptrend, which we aren't right now, this is a stock that probably still would be within buying range. You wouldn't be chasing a growth stock that's been running higher and higher forever. Still looks within range.
Oh, no question, Ken. I mean, the stock's been basing for about 18 months, about a year and a half now, and it had a good breakout this week on volume. Volume was up 4 times its average daily volume, so the institutions were really piling in there, which is an excellent sign. But with the fact that the general market itself is in a downtrend right now because of all the professional selling and distribution we've had, I'm going to stand to the sidelines and watch this stock. But if the market does change trend, this one's definitely on my watch list.
Yeah, no question about it. We'll have to talk about Apple coming out with earnings after the close. Going to see another quarter of decent bottom line and top line growth. Maybe a little bit of trepidation that the iPad sales may be a bit light. Who knows? Maybe iPhones as well. But this stock is trading very, very poorly ahead of earnings. It is down $9.32 right now at its session low to 607.51. 200-day moving average at 585 could be a near-term support level, but what is your take on Apple right now? I mean, obviously, there's been a lot of institutional selling in this stock since late September. Is this solely concerns about earnings season? Is it something bigger? I mean, Apple has made a 600% run since the start of the bull market. Why don't you kind of just give your take on Apple overall?
Yeah, I think you hit it right there. Put it in perspective. The stock in April of 2009, when this rally had started, the stock was around $90. Ran to $700 by September of this year. We've seen a fair amount of selling and distribution from the pros, and I think part of it is most stocks follow the general trend of the market. So the trend right now is currently down on an intermediate term basis anyway. And I think Apple, being the biggest stock in the market, kind of sets the tone as well. I think earnings tonight, and it's not only just what the earnings are, but how the street reacts to the earnings tonight. I'm not long the stock. I'm watching it closely. I love their products. I thought they had some great new products they rolled out this week, and I think the stock can set up another base and give you a higher probability entry point at some point. I would certainly keep this on my watch list as well.
Even if you get a higher probability entry point, the fact remains that it has still made a massive price move. So I'm in the camp that a good argument can be made that perhaps the big money has already been made in this stock. Now, it doesn't mean that Apple, it doesn't mean that it eventually, can't form the right side of its base and try to break out over 700. But, the amount of uncertainty that's around Apple right now, in my opinion, is I'm not sure it's been at this level for I don't remember the last time. I mean, you've got just serious questions the market has about execution going forward? Is it going to run? Is the company going to be run as well as Steve Jobs ran it during his tenure?
Great.
What about iPhone growth? Are they going to be able to continue to grow iPhone sales, iPad sales? Just a lot of uncertainty.
Number. That's the one everybody's keying on tonight, because we already got an insight into their iPad sales, which they mentioned were 100 million, which I think was light to what the street was looking for. But I think it's the iPhone numbers. But I think on a bigger picture, Ken, you get a stock to go from 90 to 700. How much more room does this stock have to go at this point? I think that's a valid question.
I think it's a very valid question. When you hear all the analyst commentary, I mean, there's very few people out there that like to say negative things about this stock, but me working at Investors Business Daily for 12 years and doing the workshops with you, we know what late stage bases look like, and we know the risks to late stage bases, and that's a pretty significant concern with Apple right now. So I'm just content to listen to what the company has to say tomorrow, and if the market gives another buy point at some point, I'll I guess we'll both consider getting back in. But right now, the risk clearly outweighs the reward, in my opinion.
And that could be months away.
Yeah, absolutely. So as growth investors, Keir, the goal is to buy a growth stock in the early stages of a run, not the latter stages. You have some names that you gave me, stocks that potentially could still be in the early stages of moves, innovative names that still could have more left. You want to talk about one or two of them?
Sure. I think one I'll talk about is the one I think one of the most hated stocks in America, and that'd be Facebook. And I think it's important to don't mistake a bad stock for a bad company. I think it's actually a very innovative company. We saw earnings come out this week, and the real metric that caught my eye was their growth in mobile. Their mobile advertising. I think they had $150 million worth of profits from their mobile, and that's coming from basically nothing a few months back. So, anyone that has 1 billion people signed up to their site, and they have a lot of smart people working there, I wouldn't rule out the fact that possibly they might figure out a way to make money off of them, monetize this, and I would definitely keep this on my radar.
So what do you tell investors that are thinking about buying it now? This was a $19 stock. It has a big gap up yesterday. Mostly holding on to its gains here, but the fact remains is that it's still a stock that is deep inside a base. It is, about 50%, 45-50% off its high. What are the risks of buying a stock this far off a high?
Well, a couple of things. One, you have a lot of overhead supply for people who have bought the stock at higher prices. This was a very emotional stock that a lot of people put money into, figuring it was going to be the next Google or the next great thing that I had to get in at the ground level. Well, the ground level turned out to be a teenager on this thing so far, not in the 30s. The other factor you want to look at is they still have significant lockups coming off and we're talking hundreds of millions of shares over the next couple of months. So for investors, I would let couple of things. Let the market heal, which it hasn't so far. 2, I let all this potential supply come to market and see how the stock trades. And in the meantime, you'll get another quarterly report out of the company, and you'll get to see if their business on the mobile side, which I think is the real growth, should be the growth engine for the company, is accelerating.
Gotcha. There's another internet name. I believe they're coming out with earnings within the next couple of weeks, I should say. Give me your thoughts on LinkedIn, LNKD. I heard Scott O'Neill over at MarketSmith at one point, he called it a stock that is possessed. What do you think's going on with LinkedIn? Yeah, it's a possessed stock.
Not long ago, and that was the actual words that he used. The stock is possessed.
It's possessed.
Another company with just game-changing strategy. They're changing the way people are hired in the workplace. They have a number of different engines that they're making money on. Earnings have been great, and sales have been pretty near triple digits over the last 8 quarters. It's a relatively new company to the market, but I think you keep an eye on this because I think they have innovative, game-changing technology. I think they have about 170, 180 million users and growing. And they're in a lot, hundreds, probably 70 or 80 countries around the world. I like the story, and it's one I want to keep an eye on. Again, being someone who follows the general trend of the market, I want to be long these stocks in good markets, and I'm willing to be patient until that happens.
Yeah, LinkedIn is a stock. It's corrected quite a bit off its recent high of around 125, trading right now around 105.82, down 1.6% today. Not that far away from its 200-day moving average at 101. Full year profit at LinkedIn expected to be up 63% this year and 118% in 2013. So a very real growth story going on here. Ironic, too, because if memory serves, LinkedIn gets more than half of their revenues internationally. Do I have that right?
Yes.
Yeah, they have a fairly significant international exposure. All right, Keir. So we have a market that's under distribution. What is the game plan going forward? How are you navigating things? Obviously, you're not like looking for buys right now. Just looking at stocks holding up the best. How are you going to approach things over the next couple of weeks?
I think part of it is wait to see if we get some kind of change in trend in the market, meaning a follow-through type day. And if we see that, some of the leading stocks that have been holding up the best in this market, that aren't succumbing to the pressure of the general market might be the best place to look. But I have to say patience and discipline are the best place to be right now. Having some short positions on have been profitable for me of late, whether you do it through indices or individuals' names, because we've seen a lot of leading stocks break here, and that's often very fertile ground for making money on the short side.
Good deal. All right. Well, Keir, always appreciate you having you on the program. Nice to talk to you again, folks. If you want to know more about what Keir does at Brigos Capital Management in Boston, you can go to brigoscapital.com, where qualified investors can sign up for a free newsletter. Don't forget to follow Keir on Twitter at KeirMCD. That's KIERMCD. Keir, appreciate you coming on. Thanks for all the insight.
Ken, great being with you.
All right, take care. All right, Keir McDonough. Yeah, I go way back with Keir. Obviously we're both trend investors, top-down investors, where if price and volume and the major averages are negative, that's the time when we kind of ease back, sort of get out of the market's way, and at this point just waiting for renewed signs of accumulation in the major averages. It could happen soon. It may take a few more weeks to play out here. But with the market in a downtrend, the market under distribution, leading stocks, frankly, rolling over left and right for growth investors like myself, it is a market where the risk clearly outweighs the reward for now. So just kind of treading cautiously. If you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. I publish every Tuesday an extensive weekly update, and then I send out email buy and sell alerts in between, as well as market updates, keep you up to speed with what's going on in this market. I've been taking profits recently, cutting losses short where appropriate, but capital preservation is the goal right now. I have very limited exposure to the market at the moment, and that is a good position to be in right now. When signs of a new uptrend emerge, that is when I'm going to start moving in from the sidelines again and start identifying potential leaders. That's what it's all about. Okay, thanks again to Keir McDonough from Brigos Capital Management. You're listening to Breakout Investing on TFNN. Ken Shreve with you. We'll be back in about 4 minutes. Wrap up today's show.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Quick check on the markets here as we head into the close. NASDAQ Composite just still can't get out of its own way here. It is still positive on the day, not by much though, up close to 2 points to 2983. You can see how the NASDAQ just barely holding on to its 200-day simple moving average here. It's also trading right at its last breakout area. So if you do get a convincing break for the NASDAQ below the 200-day line, certainly would bring a move down to the 2850 level into play. Not going to happen over a few days, but when you break a long-term resistance level like that, it tends to be sort of a trap door. So the next level of support for the NASDAQ looks to be in that 2850 area. S&P 500, we'll see what it's doing here as we head into the close. It is up 3 points to 1411, still holding above its 200-day moving average at 1376. So market clearly vulnerable here. Another earnings report that investors were cheering at one point today. They still are. 3D Systems. up $4.67, 13% move higher for the stock today to $40.59. You can see headed into today clearly under selling pressure, but a nice gap up for the stock. The earnings were pretty good, and this is a big short covering rally today, I suspect, because 12.2 million shares were held short as of October 15th, up from 9.6 million shares at the end of August. So increasing short interest. Looks like some short covering today. The earnings at 3D Systems up 78% from a year ago to 32 cents a share. That was 5 cents above the consensus estimate. Sales up 57% to $90.5 million. That was about 7 million or so above the consensus estimate. Another 3D firm here, mentioned often in the same breath as 3D Systems, Stratasys, having a nice day here, breaking out over some resistance at 65. The stock is up close to 8% today to 66.44. Haven't seen earnings from Stratasys yet, but earnings are due November 2nd. So we will see what that company has to say. Looked like it was going to be a big day for SolarWinds. This was a former market leader that had been under a lot of selling pressure. It had been in rally mode for 2 straight days ahead of today's results. Earnings came out. The stock soared in pre-market trading. Look at the price action in this stock today. Almost unbelievable. Hits a high of 55 and a low of 44.83. So pretty much a 10-point intraday trading range for SolarWinds. I don't know how you do technical analysis on this stock anymore, but I think you can safely say that its chart is quite a bit damaged today after today's volatility. It is down 4.7% right now to 49.40. And, the numbers were pretty good. It's a maker of IT management software. Earnings were up 19% to 37 cents a share, 6 cents above views. Sales up 33% to 71.7 million. That was about a little more than 3 million above the consensus estimate. License revenue up 33% to 34 million. And commercial new license sales accelerated nicely from the second quarter, up 39%. So some decent earnings today. We're just dealing with a sick market. That's all. Coming up tomorrow, economic data. We've got the first reading to third quarter gross domestic product, expected to show growth of 1.9% after second quarter growth of 1.3%. We also have the final reading from the University of Michigan Sentiment Index, the final reading for October. Mentioned Apple after the close. They're going to be coming out with earnings. Also, Cerner going to be coming out with earnings after the close. Shares of Cerner under a lot of pressure recently in a nasty downtrend. Stocks up 8 cents to 68.51. Also going to hear from Coinstar, NetSuite, a provider of on-demand customer relationship management software, and also VeriSign. Coming up next, the Tom O'Brien Show. Have a great afternoon, folks. I'll see you back here tomorrow, 3 o'clock Eastern. Take care.